Guys, I have prepared a list of 21 golden rules when it comes to trading cryptocurrency, especially Bitcoin with leverage. And I can already tell you, I'm pretty sure, especially if you are an intermediate or beginner trader, that you will walk out of this video with a completely different view on trading the cryptocurrency markets or maybe even the normal financial markets. So stick around till the very end. We will start with some very easy, simple rules for the very beginners out there, and then we will get more and more complex when it comes to understanding what you should do as a trader to make sure that you can become profitable or stay profitable in the long term. And as always, guys, I would highly appreciate it if you would smash up a like. Don't forget to subscribe and activate the bell. As you guys know, I'm giving all of my information out completely for free here on YouTube. And if you want to support that like many others out there already do, thank you very much for doing so. You can use the benefits that I have organized you for cryptocurrency trading in the video description down below. 20% reduced fees on the top platforms out there to use for trading cryptocurrencies actively. Number one, BitGet. You need to do a KYC there. You get 20% reduced fees with my link in the video description. BitUnix, you don't need to do a KYC there. 20% reduced fees in the video description. And Levex, quite perfect for beginners as well, 20% in the video description down below. Thank you very much for everyone out there that is using my links to trade and supporting my trading journey as well. That's how I am able to share everything for free here on YouTube, and I will continue to do so. Thank you for your support. But now let's not talk too much, let's just jump right into the 21 golden rules, because this video hopefully will not get too long. 21 is a lot, but I think it's everything important that everyone, if they're a beginner or intermediate trader, needs to understand and really needs to make sure that he remembers this and doesn't forget it, especially if he is on the way to becoming profitable. And even if you are maybe profitable but not consistently for a long time, all of these rules still apply for you as well. And let's kick it off with a very simple one that you have heard probably 100 times already. Don't chase a trade or a loss. And this is, I think, one of the most basic things that a lot of people still don't do till this day. If you have missed an entry, don't try to re-enter at a later time. Don't try to find a new reason, a new setup why you should still enter this trade. Just wait a little bit and enter the next setup. And also make sure you do the same with if the price is moving into the wrong direction. Don't try to long the market, for example. Again, if your previous trade was a losing trade, take a step back and look for the new setup. Another very basic one that probably already everyone knows out there, but still people don't really respect in the long term. Guys, just stick to your original fundamental decision. If you have a trading account of, for example, $100,000 and you are doing short-term trading, so on a daily time frame or maybe even lower, I would recommend to only risk 10 to 5% of the capital available for each trade. If you are doing swing trades, this means you are doing trades that are potentially open for multiple months. Yes, you maybe can risk 20, 25%, but that's already it. Going all in is never a good idea. One thing I already think that a lot of people have a little bit wrong in their mind, which is rule number 3, is your number one goal when trading is not to make profit. And I know this might sound a little bit crazy, because why would I trade otherwise if I don't want to make profit? But what you should have in mind, instead of trying to make profit, you should have in mind, or your number one goal should be, to not lose any capital. This should be the number one goal. Making money will be a byproduct of that. If you are not losing, you will be able to take profits along the way. So try to reshape your mindset here a little bit and go into trading with the main goal to not lose capital, instead of going into trading with the main goal making profits. I tell you, this will change the way you are trading already just by doing this simple mindset change of not going in there to make money, but to not lose money actually, and to protect your capital. This will already just emotionally and thinking wise increase your risk management by a lot over the long term. Rule number 4 that I think a lot of people are not following at all, especially in cryptocurrency bull markets, is that you need to be kind of greedy. And by greedy, I don't mean that you should take more and more risks. What I mean is that you need to leave the capital in your trading account. A lot of people make the mistakes, they turn 10,000 into 50,000, maybe even $100,000. And the first step is buying a nice watch, maybe going on some vacations, and then $50,000 of these $100,000 profit already disappeared again into lifestyle spendings, for example, and now your capital is back to $50,000. The problem is that you now got used to trading with a $100,000 capital, and you are destroying the whole compounding effect where potentially some people over many years actually make multi-million dollars of only $10,000, $20,000, $30,000 that they start trading with. If you are consistently taking profits, but taking them completely out of your capital and really spending them in real life, I can already tell you this will make risk management and also controlling your emotions much harder, because now you want to quickly get from the 50,000 back to 100,000, for example, so you can continue with the trade sizes you made before. So make sure, if you want to trade long term, to keep the capital in your account. If you have high goals, you will need to wait a little bit with doing any kind of lifestyle or taking the money out to do anything else. Leave the capital there, increase while keeping the same risk management percentages that you defined in the beginning for, depending on if it's a swing trade or short-term trade. Stick to that and your order sizes will gradually grow, and the compounding and exponential effect of your portfolio will start kicking in after a short amount of time. But if you're always completely taking out the profit that you are making, you will never get to a point where you can actually get from small amounts of numbers into very high amounts of numbers of capital on your trading account. Rule number 5 for me is definitely take breaks. Guys, just because you are a trader or you want to become one, it doesn't mean that you need to open a trade each and every single day. Take breaks, make sure you only enter setups you really feel comfortable with, and don't get into a mindset where you are a trader, let's say it, and you need to sit in front of the computer 8 to 12 hours each day taking at least 3 trades or something like this. This will end up really, really badly, guys. Make sure that even if it's a slow month, you don't have an entry for 1 week, 2 weeks. Don't stress it. You don't need to take an entry just for the sake of taking an entry. And this is also something that people do wrong. They go into trading, they think, okay, I want to become a trader, let's trade every day so I can get better. But this is already the first trap you're going to fall into. Try to make sure to analyze the price every day, but make sure you are not unreasonably taking a trade every day just for taking a trade. Rule number 6, and this is already something that has to do with market making in the cryptocurrency space, which is happening a lot more than in the traditional space. We have a lot more manipulation by big players, and they want to chase your stop losses. So one trick that I find or found quite useful as a beginner, I mean, I have to say I also made a lot of mistakes in the beginning. I started trading when I was 17. I can already tell you the first 2 years were horrible, but after I got a little bit of experience, I have to tell you one of the good things is to actually go ahead. And if you're doing your analysis and you have a place where you want to put your stop loss, one of the best recent examples is me taking a very big long position. As I said also in my videos, I told you if we are reaching the $75,000 again, I will actually go into some long positions. And I can already tell you a lot of people saw the price reversing, they saw it stabilizing, and you know what they did? They said, I will put my stop loss below the old low point. And a very nice strategy is for beginners to not put your stop loss there, but to actually not take the trade over here. Put your entry for the trade or enter the trade where you would have originally put your stop loss. I tell you, try this out. This will already make a big difference. I know you will maybe miss a lot of entries, but again, in the beginning, it's not about taking every entry possible. It is about protecting your capital and making and building up profit slowly. So this is one strategy that I know a lot of people took into account, especially in the beginning when they didn't have the perfect risk management, when they didn't have the perfect understanding of the markets and didn't develop a very good market feeling that you normally only do over a couple of years. Maybe there's a couple lucky strikers out there that immediately have this within their blood, but normally it's very rare and it takes some time. Place your entry or take your trade at the price where you would normally have put your stop loss, and I can already tell you, you will, especially in the cryptocurrency market, see that the price will retrace to this level more often than you actually think. Do not trade the news is something that a lot of people say, but that is not fully true. Yes, you can trade the news, but you will need to understand the impact of the news first. For example, when we started hearing rumors about the Bitcoin reserve, we already knew that until Trump will come in office, we might see a lot of aggressive buying in speculation for that. So this doesn't mean that in the moment the news comes out, you need to take the trade, as news events are mostly highly volatile. We only have news events that impact the Bitcoin price, especially very rarely. This is a thing that more happens with altcoins. In these moments, the prices will be very volatile. They can actually be manipulated, especially for smaller altcoins, in the other direction to liquidate and trap traders. So make sure you don't trade the news in the second the news comes out. Try to understand what this news has as an implication for the upcoming 3 to 4 weeks. And if this is maybe a bullish one, like the original rumor of the Bitcoin strategic reserve, yes, you can then move your strategy for the upcoming 3 to 4 months to look for more long entries than for short entries. But don't try to trade the immediate news. So this is something that has a little bit of truth to it, but you need to understand what you can actually do with news. So don't trade the news is a saying that is more meant to don't enter in the second, because a lot of people will do. You will just be chasing a news that maybe you are not the first one hearing about. When it comes to altcoins in the cryptocurrency market, this news might already be insider traded anyways. So make sure you just understand the news and its implications for the upcoming weeks. And this is where you then can actually make profitable entries for your trades. Rule number 8, and this is just something that people need to understand. Yes, with trading you can make more than most people in any job. There is legendary traders that are coming from almost nothing, from only a couple $10,000, and they're actually making multi-millions, sometimes even over $100 million over a 10-year or 20-year period. But I can already tell you these are rare examples. Trading is portrayed on social media like the most easiest thing in the world. Just buy this course, learn it, and then you will be a profitable trader. Just join the Signal group. We will come to this kind of topic in a later rule. I can already tell you becoming a profitable trader will take years. Yes, there is people, like we already said, that they just have it in their blood. They are completely emotionless when it comes to the money they are putting in, and they might have a nice winning streak, but don't get fooled by this. Being long-term profitable is something that is not definable in a matter of months, even if you have a good win streak. So make sure that you are not getting overconfident, but on the same time, don't bring yourself down all too much. If, especially in the first 1 to 2 years, you are not really getting anywhere, as said, number one goal should be your protecting your capital. If you are in the first 1 or 2 years of trading, just break even actually. I can already tell you, you are doing a lot better than most of the traders out there, and you are already developing a good feeling. It will just take some time, and if you are profitable in the very beginning because you are just catching a very nice bull run, for example, in the cryptocurrency market, a very important thing is keep out the emotions, don't get too overcomplicated, stick, no matter how much profit you make in what short amount of time, stick to the original fundamental rules you defined. And just because you made a quick $100,000 of $10,000, it doesn't mean that you now can suddenly risk $50,000 for a trade. You should still stick to the originally planned percentage risk management that you made sure you define in the beginning of your trading journey. Rule number 9, and this is a thing that I see out there a lot, especially through social media channels, and you know I'm a very, very big believer in the exact opposite. Don't overcomplicate things. You don't need to look at 100 different indicators. What this will lead to is that when you take an entry, first of all, it will make the decision of taking an entry a lot more difficult, because you will have 10 indicators telling you this, 10 indicators telling you that, and you will not make a comfortable decision when entering your trade. On top of that, when you are then in the trade, when the trade is losing, 10 indicators will tell you that this reversal is almost over and we will soon go up. 10 will tell you that we will go a lot lower. So you will have a lot more things that will impact your emotions, and you will take decisions that will destroy your original correct setup. So try to keep it simple. To enter a trade, you might only need to look at the chart and some chart patterns, for example. This, especially in the beginning, is, in my opinion, extremely important. Don't overcomplicate things. Don't get caught up in too many indicators. It will just make your life a lot harder, and it will make your risk management almost impossible, because you will have emotions involved. You will search for 100 reasons why the price will continue to go to the upside. If you are, for example, in a trade that is already in a nice profit, 10 indicators will tell you it's going to go much more up. You will overthrow your original take profit goal because you have 10 indicators you're looking at. Just stick to your original plan and keep it simple, especially in the beginning, guys. You don't need to look at 10 different indicators. I can promise you that the more simple you approach this, the more green P&L you will have. And I know people might not believe it, but just try it out for yourself, and I will tell you it will become true, because a lot of trading is not about using 100 indicators. Most of it is about protecting your capital and using the right risk management, and that's why, guys, don't overcomplicate it, please. Rule number 10 is, and this is something that I know might be very hard, but you need to get used to having bad months. There is profitable months, there is break-even months, there is even negatives months in trading, and you cannot try to always perform the same way. I will have a very important message for you with one of the later rules on top of this also. If you have a profitable month, don't suddenly start differentiating your percentages, just continue with your normal setup. If you have a bad month, don't try to make up for losses that you made last month or something like this. In general, I'm not really a fan of trying to track your performance month after month after month, because this will lead to you saying, oh, I have a bad month here, I need to make it up in the next month. Just trade, look for setups, and stick to your risk management. This is all you need to do. You don't need to analyze how much months you were now in a profit and why you can now suddenly start risking more because now you have a better feeling. No, this doesn't matter at all. You don't need to change it to much lower position sizes if you have a bad month because you feel now you are doing a lot of mistakes. Just stick to your strategy. Every trader has good months and every trader has bad months. 100%. Rule number 11, and this is something that helped me a lot actually, and this is very simple, because as a retail trader, you are actually everything at once. You are the analyst. You are the risk management department. And on top of that, it's your own money, so your emotions are involved. If you are taking the trade, you need to see it a little bit as a business expense. Let's say you are a retail store, and when you are taking a trade, just view it as if you have a mattress store, for example. You are now buying 10 mattresses for your inventory. You don't know yet when these mattresses are going to sell. You might even need to pay in the beginning a little bit of whatever, storage cost, for example, or electricity bills for the store. So you are in a little bit of a loss in the beginning of buying these mattresses. But your end goal is to sell these mattresses with a profit, right? You don't know when this is going to happen. And this is the same way you should treat a trade. When you're opening the trade, treat it as the money is gone. You spend that money just like a business expense, and you don't know yet when you will make a return on it. And this will lead to you not rushing into anything. Once again, it is all about patience here as well. If your trade is open for 2 weeks and there's not much happening, stick still to your original game plan, to your original risk management plan. In these 2 weeks, don't try to find 20 new entries. If the market is boring, if the market is going sideways, it is just how it is. You are already in a trade. No need to close this one to try to do something different, to suddenly go short or something like this. Just stick to your original plan, treat it like a business expense, and it will make your life a little bit easier. I can already tell you this. Just try to think about it as you would be buying into a future potential profit that you don't know when it's going to come yet. When it comes to keeping it simple, it is not only about the analysis itself, it's also about the trades you are taking. You don't need to trade, and this I said before already, you don't need to trade every day. If you are doing a trade, open a trade, maybe adapt your stop loss a couple of times if you are trading the smaller time frames. I mean, if you are doing swing trades, yes, then we have the possibility to scale these trades up and so on and so on. But if you are trading actively on the smaller time frames, if you are taking a trade, take this trade, adapt your stop losses a couple of times. Keep it simple, don't get caught up in any kind of new analysis that is coming out. You are in a current trade, you made an analysis for that trade. It doesn't matter if you are seeing a new analysis now, it doesn't matter if you are changing your opinions, whatever. You had your original plan, take your profits when the take profit levels are reached. Maybe you have one, maybe set two, so you can take some profits a little bit earlier, so you feel a little bit more comfortable in your position and you can reduce your risk, and then take the full profits when your take profit target is reached. Don't try to overcomplicate things. Search for reasons why when your take profit target is already hit, why the price will now continue to go upwards, and that's why I shouldn't take profits yet. Stick to your original game plan and don't reanalyze a trade all too much. Your next trade is not all too far around the corners. There's new opportunities almost every day. So don't stress, do your trade, focus on that trade you made, and after this one is closed and you took your profits or you took a small loss, you can now look for the next setup for your next trade. Rule number 14, and I think this is something that a lot of people do completely wrong. When doing a trade, you need to stick to the time frame you are doing the trade in. If you are doing a swing trade, and you are entering this trade based on the monthly or weekly time frame, for example, you cannot change your opinion 3 days later just because on the 4-hourly time frame it is looking a little bit bearish. This is completely wrong. If you're doing a swing trade, you only change your opinion when this opinion actually gets invalidated on the weekly or the monthly time frame. If you are entering a trade on the 4-hourly time frame, you will exit the trade based on the take profit targets you set on the 4-hourly time frame, and you will not overthrow your original analysis just because now suddenly the 15 time frame still looks bullish when your take profit target has been already reached. This is something extremely important. And one thing there as well, the bigger the time frame gets, the lower the leverage needs to be. If you are trading a swing trade on the weekly time frame, your entry might only be with a 4x leverage at a maximum, maybe 5x on the weekly time frame. If you are trading lower time frames, the leverage can become higher. Important there to say is that the higher the leverage becomes and the smaller the time frames you trade, it will get a little bit more difficult. But not only that, you also need to take profits a lot more quicker. If you are entering a trade on the 1-hourly time frame with a 20x leverage, which is already, I think, the maximum leverage you should ever use to open a trade in general, you will need to exit this trade as soon as there is the price target reached on the 1-hourly. You cannot then look at the weekly candle and say, oh wow, now after this price to the upside, the weekly candle actually looks quite bullish. Let me stay in this 20x long position that I originally opened with an analysis on the 1-hourly time frame. Stick to the time frames. The bigger the time frame gets, the lower the leverage should become, and you need to expect the swings to actually get bigger the bigger the time frames are. Because a weekly candle, especially for cryptocurrencies, can without a problem move into the wrong direction by 10% or something like this and then still close bullish and your original weekly analysis become true. But if you are entering that with anything above 5x, you will get liquidated or you will get stopped out with a very high likelihood. Rule number 15, and this is extremely important for the cryptocurrency market in my opinion. If you're a beginner trader, stick to trading Bitcoin. Yes, you can try yourself with maybe the top 10 altcoins or something like that, but don't try to leverage trade small altcoins. First of all, they are super volatile. Secondly, they are most of the time manipulated. Third, these are very news driven, so it fully depends on what the founder is saying, what partnerships get announced. You will need to keep track of a lot of inside channels that most of the time these news, especially in crypto for altcoins, will already be insider traded anyways. So make sure you stick as a beginner to Bitcoin, Ethereum, the big pairs out there. They're a lot more easy to trade just because they have a little bit of a lower volatility and they don't have so much news that randomly can impact the price. Also, market makers have a lot harder time to manipulate the big pairs, so stick to them, especially if you are a beginner. And if you want to do swing trades on altcoins, You cannot treat it like Bitcoin. Yes, for Bitcoin you can have a swing trade open, maybe for 1 year, maybe for 2 years. For altcoins, if you are looking in the past, most altcoins only survive one single bull cycle, and after that they are not performing anymore. So make sure if you are doing swing trades on altcoins, you only have them open for 4 to 6 months for a single cycle. Don't try to keep an altcoin trade open for years, because I can already tell you, you will not be profitable by that. There's a very low chance that an altcoin even survives into the next cryptocurrency cycle and performs only a fraction as good as before. So especially if you're a beginner, stick to Bitcoin and the big pairs. Trying to find this lucky gambling kind of ticket on the smaller pairs is completely unreasonable for you to do. Number 16, and this is the most important thing maybe almost, is don't try to find an easy way. I know social media is promoting it like trading is super easy, just join the Signal group, just buy my course, whatever it may be. Guys, there's a reason why I'm sharing everything completely for free on YouTube, because I already know that there is no easy way. A Signal group, copy trading, all of this stuff does not work. It will lead to you losing all of your money sooner or later, not only because somebody that is super profitable when trading would never want to destroy his entries and create slippage in the market for his position opening. Not only that, even if there would be a person that is doing that completely out of the good of his heart, destroying his profitability on the way because he's creating slippage when people immediately can copy his trades when entering it, I can already tell you that he might have a history of 2-3 years of trading profitable. If he then comes into a drawdown of 30%, he's still up hundreds of percent of in his portfolio. He can continue his trading journey if nothing has happened. But if you are exactly joining him at that stage and you have an immediate 30% or 50% drawdown, you will have to make 100% to even get back to your original capital. So there's no real way. The only real way to actually become profitable is by learning it yourself, doing it yourself. And also buying courses is, in my opinion, completely unnecessary. All information, I mean, looking at my channel, looking at just Googling, is completely for free. And most of these times, these courses are going to promote you some secret strategy, an exact combination of indicators to use. So it will be just, again, something that will overcomplicate things, that will keep you from actually becoming profitable, because you will think you bought a course, so you might now need to get profitable because you have spent this money for the course. And just take this money as trading capital. There is no secret course, no secret strategy, no one you can copy, no Signal group out there that will make you a profitable trader in the long term. Trust me on that. Don't waste your time, don't waste your money. Rule number 17, and this is something you will need to understand, especially in crypto. There are highly profitable market making firms out there. They can actually manipulate the price of even Bitcoin. And I can already tell you, if the market is overly bullish, you see that everyone is saying the market is continue to go up. Try to put yourself in the shoes of the market makers. Getting back to the rule that I told you in the beginning, or the trick that you can for the beginning actually place or open your trade where you originally planned to position your stop loss. I can already tell you, the market makers, when the market is moving aggressively upwards, when you see everyone out there taking long positions, there will be a retracement 80 to 90% of the time. So don't rush it, and try to make sure you understand what is the public doing right now. What would I be doing now if I would be just following everyone else? What would I be doing if I would listen to my emotions right now? And then try to prepare to enter the same direction but at a lower price. Because the market makers will never fully invalidate, or will be able to fully invalidate, a bull run, for example, or a bear market. But what they will be able to do to cause short-term panic or short-term euphoria. And this is something you don't want to fall into, and you will need to try to make an understanding of what is interesting for the big players now. What is the move where the most people out there would get wrecked right now? And make sure you not only take this move, maybe open a short when the price has already moved up super aggressively and you see a lot of people being in profits and being long, because the market makers will want to move the price down, liquidate these people out of the market. make sure you also take the profits, because as said, these market maker moves are only short-term moves. It's short-term euphoria, it's short-term panic. And you can make use of that if you are trying to enter, for example, at a lower level or at a very high level. If we are in a big correction and there's suddenly a very strong pump, you already know it's most likely market makers just liquidating people out. If we are in an extremely aggressive run and suddenly there's a sharp correction to the downside, it's most of the time the market makers liquidating some longs. You should not be scared like everyone else then. Take the opportunity, take the long position, or just leave it at the sidelines and wait for the next trade setup. You don't need to play with the manipulation, but this is something that is important also for you to understand. Try to understand what is interesting for the big players, what is interesting for the market makers right now. Rule number 18, and this is still something very important, it goes back to creating your fundamentals. You should create fundamentals in the very beginning. How much capital do I put to trading now in the first place? How much percent am I risking per trade? Keep this exactly the same. Also, don't allocate a too small amount of capital. Otherwise, you will need to replenish your capital over and over again. If you know you will probably, after depositing $5,000, anyways do another $10,000 in the case you lose them, just go ahead, do the $15,000 directly. Define your percentages, 10% for trade, for example, if they are short-term trades, maximum 20%, for example, if you are doing swing trades, and keep it at that. Keep your capital in account. Like I said in the previous rules, don't cash out profits too early, otherwise you cannot make use of the compounding effect. You will chase your old account balance. And when you are making these rules and you are looking to risk a certain amount of capital for each trade, base your stop loss on the amount of money you want to lose, not based on the chart. This is also something that, in my opinion, is highly important that not a lot of people do out there. If you base your stop loss on the chart, what we discussed earlier, it will get hit most of the time. Because in this case, you will search for something that is not there. You will say, I want to have at least a $10,000 trade. I have now $1,000 with a 10x leverage, right? So I need to put, but I only set in my fundamental rules, I will lose, for example, make a 30% drawdown per trade. Then your stop loss will be so close to the current price, it's so likely to be hit. You should then rather have a $3,000 trade with a 3x leverage of $1,000, for example, and then your drawdown of $500, right, or of 30%, in this case $300 of $1,000, will put the stop loss a lot lower, and it will get a lot more unlikely to hit. And it doesn't matter where this stop loss then is for the $300,000. Sorry guys, but for this example, $300. I'm confused by the high numbers after all this time, but $300. For example, that you are risking, your stop loss will be, there's a lot lower chance that it's going to get hit. So base it on the percent you want to lose, not on something that you see in the charts. This is also something that is highly important. Rule number 19, and this is now one of our almost last rules here already, don't set financial goals. And the last two rules are also very important for beginner traders, guys. Don't set financial goals. You cannot approach trading with the motivation of making $100 each day or having at least one trade a day. We said this earlier. Don't set financial goals when trading. You will get emotional if you are not reaching them. You will try to reach them by force, by over trading, by taking more risk on a position that you would originally never have done. So make sure to not set financial goals when trading. Going back to one of the earlier rules, the number one rule is to protect your capital, not to make a set financial goal for each week, for each month, for each day. Don't set goals. You don't want to trade and try to make $100 every day. This is one of the worst things you could do emotionally and decision-wise, because it will force you, if you want to make $100 a day, it will force you to take more risk if you have a losing day in trading, for example. How do you turn this into a profit? By doubling down? By tripling down? Guys, don't fall into this trap. You should not set financial goals when trading. As I said earlier, also, there is bad months, there is good months. You cannot predict your performance, right? So don't set financial goals. This will definitely lead to emotional and over trading. Rule number 20, and I think this is one of the most important things, especially if you're a beginner. Stick to your normal job. If you have a working job, if you are not a teenager or something like this, stick to your job. It will take years to become a long-term profitable trader, and it will give you a lot of peace of mind, coming back to the fact that you cannot set financial goals. If you have a couple profitable months with trading, you turn at 10,000 to 40,000, you suddenly think, oh, I don't need my job anymore, I will quit it, I will be a full-time trader. Suddenly, the pressure will be on. You will need to perform every day. You will need to take money out of your trading capital account every day to pay, every month to pay your bills. It will create a lot of pressure, and you will have a high risk of, when you are losing it all, especially if you are not for years already a profitable trader, you will have the risk of going back to a less paid job. You will have a harder time to build up capital again because you might be in debt at that point for trading. So make sure you stick to your normal job as long as you are not profitable for a multi-year period on time. Stick to your normal job. Continue trying to earn more money in your field of work. Take a portion of this money, increase your capital for trading step by step, and then you will reach sooner or later a point where you can actually comfortably, with maybe hundreds of thousands of dollars on the side from trading, you can quit your job and focus on this full time. But especially in the beginning, trading is not a job for you. Trading is something that you need to learn first, and you will need to build a very big financial cushion to be able to support your living standards with trading alone. So don't treat this like a get-rich-quick scheme. And now for my final rule, something that is very simple. If you are in a losing trade, don't try to find reasons why the price will reverse. If you are in a profitable trade, don't find reasons why the price will continue to the upside. Take your loss, take your profit, keep it simple, stay in your job, make sure you understand that it takes a long time, and respect all the other rules I mentioned in this video. And I can already tell you, your trading journey will be a lot easier than most people's are that are listening to some weird course selling gurus that never had a profitable year of trading in their life. Maybe with the money you gave them for the courses they are profitable, but not with trading. So make sure you stay away from that as a final message here. And now guys, I hope you enjoyed this video. I would highly appreciate it if you would smash up a like. Don't forget to subscribe, activate the bell, leave a comment down below. If you want to support my channel and me giving out all this information for free, sign up to one of these exchanges in the video description down below. BitGet, one of the biggest out there, massive liquidity. I highly recommend it. 20% reduced fees. You can get nowhere 20% reduced fees besides with my link in the video description down below. But you need to do a KYC. Same goes for BitUnix. 20% fees reduced, high sign-up bonuses, everything completely for free. And you're supporting me by that. And Levex for sure, nice for beginners. Also an exchange that you can use. You also get 20% reduced fees with my link. Also, so yeah, if you want to trade higher amounts of money, use BitGet or BitUnix. Just decide if you want to do a KYC or not. If you are a beginner, you want to start trading smaller amounts, use Levex. Very beginner friendly. You can also purchase cryptocurrencies at Levex actually with fiat, so with US dollar or euro or whatever, Canadian dollar, whatever you want. So you can also use that for your kickoff journey. And yeah, make sure you subscribe, activate the bell so you don't miss out on anything else. See you soon, guys. Bye bye.